If you are a NEO investor, you must watch this video. There are some shocking things shared on the earnings call, and I've noted everything down for you guys. But firstly, we got to quickly recap the earnings result. So we got record quarterly revenue of almost 2.7 billion US dollars, which is absolutely fantastic. And we saw margins stable at 13.1% in the fourth quarter of 2024. And of course, gross margins actually increased to 11.7%. But however, net loss was a scary 974.3 million US dollars, quite substantial. There's a silver lining. Okay, we'll talk about what the CEO said in a bit. Cash stands at 5.7 billion US dollars as of the end of 2024. So the earnings call started with the CEO talking about how Q2 they will launch the new vehicle refresh for the 5566, and then later this year there will be a surprise vehicle model for the NEO brand that will significantly boost margins and significantly boost branding positioning. So it's going to be a shocking product. And then the Onvo 90 will launch in Q2 very soon, and deliveries in Q3, and later Onvo will have a third product in Q4. They talked about some of the achievements that they've made, such as the industry best AES and AEB, preventing 3.4 million potential accidents. Talked about autonomous driving, NEO World model. We've all covered that in our channel. And of course, they confirmed that they are still accelerating global expansion. And they have improved margins significantly thanks to lower material cost, and after sales improvements have also helped with margins, something that we've also reported on this channel before. And then there was strong focus and questions about the latest round of restructuring. And they said from the entire year of last year, there was significant cost management reflected in margin improvements. But on cost, they will continue to cut cost and focus on supply chain and R&D efficiencies. They talked about how Onvo spent a lot of money in terms of brand and store buildup, and this will also be reflected in Q1 because in Q1 they continue to expand stores and also more advertising, and we've also seen a lot of that on our channel as well. So the cost saving results will be reflected on Q2 results. So in Q1, we won't actually see these results take effect. More of the cost savings will be reflected on Q2 results. So you can expect Q2 results to show good improvements. Now, they've seen some good results from the improvements to the spending that they've made, and they're confident in achieving profitability in Q4, which is absolutely fantastic. They talked about Onvo sales not meeting expectations, and they came up with a few reasons why. They said as a new brand, the brand is relatively unknown, and after digesting the initial orders from the launch, the new orders face pressure because of this lack of brand recognition. So in response to that, they have increased marketing, ads at train stations, elevators, social media marketing, and we've all seen that on our channel as well. So they did some market research, and apparently brand awareness of Onvo is only 1/3 of NEO. So out of 3 people that know NEO, only 1 knows about Onvo, which is absolutely insane. Some new stores are still not fully efficient because they just started that new store. Sales staff needs training and time to be able to improve sales capabilities and to be able to close deals. So there's going to be some time before increased sales power. However, they are seeing some very great results in terms of test drive numbers. They're increasing month over month. Also, orders are increasing month over month gradually, but increasing nonetheless. And they also shared a shocking statistic that in 12 areas in China, the Onvo sales are actually more than NEO, which is very, very nice. And then in some areas, so there was this question about will NEO and Onvo potentially merge? And that's, of course, to save on cost. So even though the CEO said the sales will not merge, aka Onvo cars will not be placed in NEO stores, some areas have one team managing both brands, but the brands will not merge. And they also have a new pilot program or an idea about Onvo sales rep being able to sell NEO cars and NEO sales reps being able to sell Onvo cars, and they're seeing great success with that as well. And that will also really help boost sales going forward. So they talked about future expectations. Clearing inventory in Q1 because of the model shift will affect margins because they're doing promotions and stuff. And margins may decrease in Q1. And so this is them giving out the warning to you guys. There's a specialized team that is doing cost cutting management and identifying new places to cut costs, and thanks to them they're able to reduce the bill of materials cost by 10%. And then this year, of course, there are 9 new models coming in total this year, including the ET9 and Firefly. And Neil will have the heavy hitter later this year. In my personal opinion, it could be the MPV, could possibly be the MPV. And according to management, they said it will greatly help with margins. They will continue to have multiple models for Neo for personalization reasons. Some people said some models might be redundant, but it's there for personalization reasons. However, Onvo will not have that many vehicle models. And then in terms of financing, they may have other financing options, and they'll see as they go. So they haven't ruled out future financing. They have hinted at major improvements in cash flow in Q2 because this is a big product year. They also said that capex will be higher this year than 2024 because of the new vehicles requiring new factory parts, new molds, factory modifications. And of course, these new models also means factory number 3 is going to be up and running, which will also increase capex cost. However, the good thing that they've said was that swap station capex is actually very, very low because they will mainly use partner resources. Last year, they launched a battery swap franchising program. So for battery swap development and deployment, they're using other people's money to build those swap stations, so reducing their capex cost. And then when asked about plans to use NVIDIA store chip, they said there are no plans to use NVIDIA store chip because they have their own chip. And then Onvo uses the Orin X chip, and they will continue to do so. And they don't have any plans to use NVIDIA store chip. And the increase in after sales is really, really nice. So after sales are improving. Power services are still experiencing losses because of rapid development. Providing technologies to partners has generated good revenue. However, this is not like repeated revenue. Like for certain quarters, you might see this pop up and really boost their other revenues. So this would be like tech licensing to other companies and also to supply chain partners as well. And then if you don't consider providing tech to partners, in 2025, other sales will still be slightly negative in terms of margins. Now, when asked about the long-term target, it is, of course, 2 million cars annually with 20% margins. And this is for like 2030. And the CEO said they need 2 million cars annually with 20% margins to survive long term. So take that for what it's worth. And very big, scary loss, but they are making good improvements. It seems like Q1 will still be a very bad quarter, but Q2 is looking promising. As always, stay safe, stay healthy. Peace out.